Do you struggle at getting live funds to open an actual trading account? If so, I'm going to show you the solution to that in this video, where you can use something called a prop firm, which is an account you can buy at a very affordable price, and you can get payouts with it. In this video, I'm going to show you how to choose a legit prop firm, as well as how to trade it, how to follow the rules, and how to address your trading based on the prop firm you choose. So without further ado, let's get into it. So what a prop firm is it's basically a company, okay, and there's a lot of them, that you can buy these fake demo accounts on. So you can buy a fake demo account on a prop firm, okay? It's exactly as it sounds. It's not real money, okay? And there's many different sizes. So just to show you guys, I'll go on the prop firm that I use just to show you guys an example. So this is the prop firm I use. It's ApexTraderFunding.com or ATF.com. So like I said, it's a ton of different sizes. You can get a lot of sizes. So if I click this Tradeify option, just click the drop down arrow, it's going to tell you many different sizes of the account you can possibly purchase. And you're probably like, oh, I'm going to buy a $100,000 account and be $100,000 richer. That's, again, it's a demo account. It's like a challenge. It's like a test. It's like you're in elementary school. You have to take a reading test to move up to the next level. Okay, in order to get real money paid to you, you have to first buy this account, and you have to pass the test one time, and then you have to buy like the funded account, which is a little more hefty fee, but again, it's not that bad. If you want to get paid for real, you have to basically pass the test twice. Okay, and they give you a bunch of rules or a set of rules that you have to follow if you want to pass the account and get that payout. So what we've learned so far is it's a fake demo account. There's a lot of different sizes, and you can buy all these sizes. It just depends on what you prefer and how much money you have. Okay, and again, there's usually this firm runs a lot of sales. So right now it's an 80% off sale. If you use code Dodgy, you just have to type it in this coupon code right here to get that discount. But you can buy a couple, you can buy 10, you could buy, again, if it's discounted, I usually buy more than one. But again, that's like the overall what a prop firm is. So why is this better than trading a live account? Well, it's better than trading a live account because let's say I'm putting $500 into a live personal account, and I lose $300 of that. I only have $200 left. You can use $500 to buy about 20 evaluation accounts on this site. So you can have 20 different accounts, or you could buy 10 accounts using that 500, and then you could fund all 10 of those accounts. So basically, you can use that $500 and you can get 10 counts. You can get a lot more practice in with that $500 using prop firms rather than your own money. Let's say you blow your personal portfolio, okay? If you blow your personal portfolio, you're done. You can't trade anymore. If you blow a prop firm account, you're losing however much you paid for it. So you're losing like 30 bucks. Now, if you blow your funded account, you're losing about 150, but it's still a lot less than if you blew a personal account, which makes it so good. Now, the catch to this, because you're probably wondering what's the catch, is the rules. There's some rules to this. So basically with these accounts, what happens is, let's say you start at 50,000. And if I'm up $500 in a trade, but I do not sell, okay, basically that's bad, because when I first get the account, you'll blow the account if you go to $40,750. So a 50K account, if you hit 47,500, you blow the account. So you're losing $2,500, you blow the account. Now, are you actually losing a real $2,500? No, you're losing like $30 or whatever you paid for the account. But the problem is with these accounts is when you go up $500 and don't sell, this actually goes up to 48,000, which means you now can't go below 48,000. So my strategy kind of combats this because I take a lot of partials and move my stop up, okay, to combat this a little bit, which I'll show you in a second. But that's like the biggest thing and hardest things with the accounts. Okay, the other thing is once you're funded, you have to have 8 consistent days. You could flip 2 of them, and flipping just basically means buying and selling a micro in 2 seconds just to make it count as a trading day. But in general, you have to have 10 consistent days. And by consistent, I mean you could be up $200 one day, lose 100 or 300 the next day, up $500 the next day. That's fine. Okay. You just don't. Only thing with the Apex is you do not want to average down on a funded account, but on an evaluation account, that is perfectly fine. So 50,000, 50,500. If I'm up $500 on a trade, but I do not sell, it will go up to 48,000. Okay. Now let's say I'm up $500 on the trade, but my account goes back to 50,000. My trailing drawdown is now 48,000, so I only have $2,000 of risk. Okay. If I do the same thing next trade, I make 500 again, and I'm up 500, this will not go up another 500. It only goes up as this goes up. So if I go to, it's at the highest point. So if I go to 51,000, then it will go up another 500. But if you go down to like 49,000 and then make like 500 again from here, this isn't going to go up. Okay, it has to be at the highest point. So that's like the basic rules of this. But again, the key thing is when you blow these accounts, you're only losing like $30, and it's great practice because I tell my friends, I'm like, just buy these accounts, practice on finding a strategy. What I want you to do is I want you to go to the chart, go on MNQ contracts, okay, and I want you to practice risking whatever so-and-so amount per trade. So what I do is for my strategy for these prop firm accounts, I kind of look for a bearish fair value gap, and I look for some sort of high or low I think is going to be hit. And we can see we have equal highs here. So, retail traders will identify this as a double top. So that's my draw on liquidity. I'm going to take the candle close above, okay, and I'm going to target the high, whatever it may be, and then stop at the low maybe. And I tell people, I'm like, these prop firm accounts are great because you can practice entering positions, practice executing, practice managing risk. And let's say I'm on a 150K account. I'm going to practice managing $150 of risk here. So I'm going to type in 150 here. It lets me take 2 contracts. I'm going to buy 2 on this close, maybe sell 1 here at this high, and then sell another 1 here. But it allows you to get that practice in without risking your own capital. So today the entry I took is I kind of entered a close here, and a lot of times in my positions I will scale. Okay, scale at the next high. And if we go to the 2-minute time frame, we actually had these equal highs here. So I took a contract off there, because if you don't take a contract off and we hit these highs, or we don't hit these highs, Apex will screw you, because it will move your trailing drawdown, which is 47,500, up if you're up in a trade. So I try to take partials as much as possible, and then if I'm really confident, I will leave a runner, because again, confidence is key in this. The only reason I don't blow my accounts and don't get the trailing drawdown hit is because I take very A+ setups. I don't try to mess around and gamble medium tier setups. So that's what I do, and I'd like to trail my stop, so we can kind of be put in an order block here. So I'm gonna, instead of having my stop loss here, I'm gonna trail right here, because I know the trailing drawdown is trying to haunt me. So if we form like a fair value gap, or an order block, I'll kind of keep moving my stop up. So that's how I combat the trailing drawdown on Apex. Again, if you want to learn more about my strategy, make sure to watch the My Strategy playlist on my YouTube. I go over how I trade, but I think that's the best way to trade Apex. As you all know, I only use inverse fair value gaps, and recently I made a full free PDF of inverse fair value gap rating setups that I use to rate my own setups A through C. So if you want to check that out, just click the first link in the description. It's completely free, and hopefully should help you. That is what a prop firm is. There's multiple different top firms. Another noticeable one that you might hear is topstep. The difference with topstep is there's many different rules. So you can research this, and there's little different rules. The only thing I don't like about topstep is when you're in a funded account, you can only trade up to 2 micros on a funded account. You can't trade more, which is kind of annoying, or you have to trade a mini. And to be honest, I think trading 5 to 10 micros is the best, and it just doesn't make sense to trade 2 micros. It's just, you have to hit $200 a day to have a day count, and it's hard on new traders. So I like Apex better. But there's many different prop firms. You could research them on Twitter, you can research them on Instagram, you'll probably see them all over. Apex is not a scam. I've been paid from them before, but hopefully this video kind of enlightens you on how prop firms work. And yeah, hopefully, like I said, hopefully this is educational. Hopefully you understand. Don't forget, use code Dodgy, 80% off right now in Apex. And that is it. Have a good evening. Have a good morning wherever you live. Peace.